investors, I would like to welcome everyone to Set Opportunity Day of Thai Union Group Public Company Limited, or TU. The executives who are joining us today include Mr. York Aile, the Group CFO. Mr. Wayat Pakoli, General Manager, Investor Relations and Corporate Investment. Mr. Bes Wayanon, IR Manager. And myself, Pimchanok Noknoy, IR Analyst. For agenda today, we will discuss company overview, key highlight, recent development, financial analysis, sustainability update, and outlook of the company. First, I would like to start with brief company overview. Thai Union is one of the world's largest seafood processor and exporter with 39 years of experience. We started our business in 1977 as a private label tuna packer of our brands. Over time, we have acquired more brands under our portfolio. Chicken of the Sea in 1997, the number 3 canned seafood brand in US, MW brands in 2010, the leading brand portfolio, the owner of leading European seafood brand, namely John West, Pepinavir, Parmentier, and Malibu. Other recent transactions are Alliance, leading chilled smoked salmon producer in Europe, King Oscar, premium brand of canned sardine in Norway, Australia, and the US, Orion, the lobster supplier in the US, and recently we acquired Rügen Fish AG in Germany, which was completed in the first quarter of this year. Thai Union is the leader in canned tuna business with largest canned tuna production share of 18% of global capacity. We are the seafood-focused company supported by 3 product segments, including ambient seafood such as canned tuna, canned sardine and mackerel, and other canned seafood, frozen, chilled seafood and related, such as frozen shrimp, chilled smoked salmon, and other seafood. And the last one, pet care and other businesses, including pet care products, value-added products, and other products. Series of acquisition over the last 20 years allow us to have the global leading seafood brand portfolio. For example, John West, number 1 canned seafood brand in the UK, Ireland, and Netherlands. Pepinavir, number 1 canned seafood brand in France. King Oscar, number 1 premium canned sardine brand in the US, Norway, and Australia. Select, number 1 canned tuna brand in Thailand. And Chicken of the Sea, number 3 canned seafood brand in the US. We are the owner of leading brand in major markets across 4 continents, USA, Europe, Asia, and Australia. In first quarter of 2015, we have around 13 billion Thai baht revenue from branded business, or 44% of total sales. We also gained a significant brand share in major markets, as you can see from the slides. And now we would like to pass through the stage to Mr. York Aile to start the key highlight of first quarter.
Thanks a lot for the introduction. A very warm welcome to the SET Opportunity Day and the Q1 result discussion for Thai Union. Let's jump right into the Q1 results. We have been able in Q1 2016 to grow our business year-over-year 9.3%. Key drivers for our growth are coming from a very strong tuna business, the acquisition and the consolidation of our new family member Rügenfisch and Havesta in Germany, and this has led to year-over-year growth of 9.3%, also supported by a very strong volume growth, especially in our tuna operations. Gross profit margin has been up 22.3%. That is a 15.5% gross profit in percent of revenue. Again, our strong European branded business is contributing here to a continued strong performance. In addition to some strategy change that we have implemented in the United States, in the US, our business was suffering very strong price competition, especially in the canned seafoods space and chicken of the sea. We have decided that we walk away from very extensive trade promotions, that we eliminate negative trade promotions from our activities, and that we focus much more on margin quality and on operating profit for our US ambient business. This has cost us a little bit of market share. At the same time, our margin has improved substantially in the US, and our bottom line performance is better than we had expected. So we are clearly earning money in the US despite the fierce price competition. Reason, we are eliminating bad and expensive trade promotions from our activities. Pet care, another very strong contributor to our business. The pet care business has grown more than 20%. We are now in gross margin ranges that are very close to 30%, between 27-28% is gross margin for our pet care business. We are in a high teen operating profit level for our pet care, so the turnaround was successful. We have been able to combine this into now a new global end-to-end pet care division, including the US operations and the Thai operations. We have returned to growth. We're working very closely with a lot of OEM customers on new programs. Of course, there was some beneficial development in Q1 in terms of currency to the US dollar and to the euro, so there is some level of positive translation effect. If we look at operating profit resulting from much improved gross margin and the 9.3% growth, our operating profit has improved to nearly 55% compared to Q1 last year. That is 4.7% of sales. I think that's a very good performance for Q1. Just to remind ourselves, Q1 is usually, from a seasonality perspective, not one of the strong quarters. Q2 and Q3 usually are much stronger. Next page. To look at some of the metrics, top line we've already explained, 9.3% Q1 to Q1. Gross profit plus 22%, operating profit plus 55%. Now, if we remember, in Q1 2015, we had one-off currency gains of around 850 million baht. So Q1 2015 was artificially inflated. Those one-off currency gains, of course, didn't recur in Q1 16. So net profit is slightly down, 19% down. But if we eliminate those changes, those FX gains, also net profit is substantially up compared to last year. We have just one back. Just on a net debt to equity. Net debt to equity has further reduced from 0.76 times to 0.69 times net debt to equity. So you can see our balance sheet is extremely strong, cash flow is extremely strong through the cycle, and Kun Paco will later on explain a little bit about cash flow performance. Our share price is up 27%, so that's a good news compared to last year's performance. We were still affected a little bit by the bumblebee effect. This has now completely reversed. We are now back in full strength and are looking forward for more. Long-term development, I think here the main message on this chart is if you look at our sequential development, quarter 1 to quarter 1, quarter 2 to quarter 2, so year-over-year development, you can see our gross margin in % of revenue has improved every quarter out of 9 quarters. We are also growing our business 9 out of 9 quarters, so I think this is a very strong top-line development, very strong gross margin development. And in terms of Thai baht contribution for gross profit, 8 out of 9 quarters, we are better than the same quarter the prior year. So extremely strong underlying operational performance development for Thai Union, also in Q1 2016. And I think with this, maybe Paco, Kun Best, I pass to you to explain. Oh, okay. Recent developments. Some key topics that happened over the last couple of weeks and that we are proud of. On 23rd of March, Thai Union has signed a joint venture agreement with Avanti Feeds. Avanti is an Indian shrimp feed producer. We own a little bit above 25% in Avanti. We have now formed a new joint venture with Avanti that is looking for shrimp processing. Avanti has transferred their own shrimp processing operations into this joint venture. So with this activity, we are poised for growth also in our shrimp business. We're expanding our manufacturing operations that at this moment are primarily in Thailand. We're expanding this to India, and with this, we believe we can capture new markets, and we can also balance and hedge the risk of only having a Thai operations with also adding here India. In terms of innovation, end of March, we have signed at Mahidol University the next level of our global innovation incubator. Extremely successful cooperation with Mahidol University. We've been able to grow the number of researchers at our center to 80, and that's only within 18 months. We are now investing into 1,200 square meter for new research equipment that will cost around 70 million Thai baht. So very strong innovation support here in Thailand to build the first and only tuna research center in the world. We got some recognition for our activities. 2015, we've been awarded by Finance Asia Best Managed Company, Best CEO in Thailand, Best Investor Relations team, most committed to corporate governance in Thailand, and best at CSR activities in Thailand. I think it's a very good recognition for the work we did last year. Last year was not an easy year. We had a lot of topics to deal with, and I think we showed to the public, we showed to the capital market our strong commitment to corporate governance, to compliance, and to our social responsibility. Right, so maybe we pass to discussing a bit more detail on the financial performance.
Thank you very much, Khun Yok. For the financial performance for the first quarter of year 2016, as Khun Yok has mentioned earlier, during the first quarter, we have experienced a very solid growth, strong sales growth of 9.3% year-on-year to 31 billion baht. This sales growth has been driven mainly by the strong tuna sales growth. Partly, of course, it has been driven by a high tuna raw material price, but on the other hand, we have seen the quantity sales also have been improving as well. There has been the acquisition of the Rügen fish that has been propel our first quarter sales growth as well. That has been consolidated for the entire of the first quarter, which has supported part of the sales growth. And last but not least, the pet care business has resumed its normal business operation, both in terms of profitability level and as our initiative to drive through into the pet care business by consolidating both the business in the US and the Thailand. We have experienced a strong growth, and we believe that this trajectory will continue to be solid in the coming quarter. For the sales mix by geography, during the first quarter of year 2006, the USA sales have been USA market still contribute to be the biggest sales mix in terms of our portfolio at 41%, while it's actually declined by 1% from 42 from the entire year 2015. Please note that the US sales remain still positive on the absolute level, but the key part that's been growing very aggressively is actually the European market, where we have been focusing on growing our branded business in the European market, particularly from our John West brand, which is the #1 brand in the United Kingdom. For the branded and the private label sales, as of the first quarter, the total brand sales alone has been growing at 9.9% year-on-year. This is mainly thanks to both the organic growth, like what I mentioned earlier, from the European market mainly, and the M&A sales, partly from the acquisition of the Rügen fish. The private label sales also growing as well at about 9%. But in sum, the branded sales still account for about 43% of our total sales during the first quarter of this year. For the gross profit margin, we have seen the significant improvement in gross profit margin during the first quarter. We have achieved gross profit of 4.8 billion baht. This is up 23% year-on-year, driven by the strong profitability growth in both tuna, shrimp business, and pet care business. Especially we like to highlight the shrimp business, where there has been a significant improvement in the margin from the frozen seafood trading business in the US. And tuna business, we have now decided to step away from the aggressive price competition and focus on the profitability. And as a result, while we sacrifice market share a little bit, but as York has been mentioning, our gross profit margin in the tuna business has been improved very significantly. For the pet care business, we have resumed the normalized level of profitability, and we expect that this kind of strong profit margin will continue to pursue into the next quarters going forward. For the operating profit, we have reported the first quarter operating profit of 1.4 billion baht. This is up 55% year-on-year, driven by solid improvement in gross profit margin level. Please note that SG&A to sales ratio is remain at about 10.9%, which is relatively high, up 35 basis points year-on-year. But this is mainly due to our investment for growth. We have investment in numbers of marketing initiatives, number of M&As during the first quarter, which should help us propel into our growth in the upcoming quarter. And despite the high SG&A to sales, the first quarter operating profit margin is still at 4.6%, up a significant from the 3.3% during the first quarter of last year. The EBITDA has been down 6.6%, but this is mainly driven by the fact that during the first quarter of last year, the FX gain has been very chunky at about 1.1 billion. Versus the FX gain that happened during the first quarter of year 2016 of only 200. While if we strip such growth, such exchange rate gain, we would experience significant improvement in terms of EBITDA. On net profit, we have report net profit of 1.2 billion. This is down 19%. Again, excluding FX impact, the first quarter of year 2016 adjusted net profit should have actually improved by 150% compared to last year. The solid underlying operational performance are driven by the strong operational improvement, as we highlighted earlier. But aside of that, we have reported a lower financing cost, partly from the lower debt repayment and partly from the lower effective interest costs due to our own refinancing and paying down debt. For the free cash flow, we would like to highlight that during the first quarter, our free cash flow has turned positive again of 4.4 billion baht. This is mainly due to our initiative to improve our working capital management very aggressively, as the inventory day has been coming down to 116 days compared to 131 days during the same period of last year. Our debt is still predominantly Thai baht, with 81% of debt are still in Thai baht, and the bulk of the debt has a maturity beyond 2020. So our balance sheet are very solid, not only from the perspective of lower net debt to equity ratio, but also in terms of the maturity of the debt that has been postponed into a very fine to 5-year or longer period. From this cash flow activity during the first quarter, we would like to highlight that during the first quarter we have acquired the Rügen Fish with the investment in subsidiary column with a budget of 1.5 billion. So this is including other investment activity as well. But during the first quarter, we have reported EBITDA of 2.7 billion. This has implied that we have sufficient internal cash flow to fund the upcoming M&As. This has stressed, I cannot stress enough that the company has a very solid cash flow generation, and even now we have a lower debt compared to the end of last year. The ROE has been improving from the same period during the end of last year to 11% from 6.6. The ROCE has been also improved from the last year. The inventory day compared to last year has been significantly improved to 116 days, and net working capital day has been improved as well. The net debt to equity has been declined to 0.69 times. So we're considering our balance sheet is very solid at the moment. In terms of sales mix, we classify our sales into 3 segments. First is the ambient seafood, which comprise mainly of shelf-stable product, mostly from tuna business, sardine business, and ambient and pouched salmon, which are the shelf-stable product. This ambient seafood constitutes to almost half of our sales at 49%. Due to we have a lot of brands under this, either Chicken of the Sea, Sea Leg Tuna, John West, and the most recently acquired Rügen Fish, our branded business under ambient seafood account for 60% of the total ambient seafood. So in a major bulk of the ambient seafood actually coming from the branded business. The frozen, chilled seafood and related is second pillar of our business. This pillar comprises of mainly the frozen and chilled product, which are required it to be refrigerated during transportation and storage. This business, including the 3 key business segments, which is shrimp and related business, frozen and chilled and smoked salmon, and other seafood such as crab or shell. This business segment has contributed 39% of our total sales, and due to the nature of this business are mostly private label. 34% of this business are branded, and 66% remaining are from the private label. The last business strategic segment is actually coming from pet care and other business. So as the name implied, this business has been contributed from the pet care business, value-added business, and other products. These businesses are mainly predominantly the OEM and private label in nature and account for 12% of the remaining sales. For the ambient seafood product, we have achieved a very strong growth of 8.3% year-on-year. In terms of quantity, we have also experienced a growth as well of 4.7%. This growth are actually driven partly by the rising in raw material, particularly the tuna price, and the acquisition of Rugen fish starting at the beginning of the year. We can see that during this, in the ambient seafood category, our branded business are the key driver of the strong profitability of the business segment. We have seen that during the first quarter of year 2016, the branded ambient seafood has been reporting 23% gross profit margin compared to the private label of 12%. So as a result, our total gross profit in the ambient seafood segment is staying at about 18%, which is up from 17% last year. This is mainly driven by the strong growth in branded business in European business, and the lower cost material price, and the fact that we have changed our strategy in the US market to focus more into profitability rather than market share, and thus avoid aggressive pricing competition. On the frozen and chilled seafood and related, we have experienced a sales growth of 12% year-on-year and a quantity growth of 28% year-on-year. This growth has been driven mainly by the strong growth in the fish feed business and the overseas shrimp trading company, particularly the Chicken of the Sea frozen food, which is the leading seafood operator in the US market. The gross profit margin has also seen a significant improvement of 2 percentage points from about 6% during the first quarter of last year to 9.5% during this year. And the pet care business, pet care and value added and other business, we have seen the sales continue to grow at about 3.1%, and the profit margin continue to improve by about 1% to about 22.8% as of the first quarter. This is driven by the USP and our pet care business has improved its operation and continue its growth trajectory, which continue to happen during the first quarter of year 2016. And in sum, we have presented the segment profitability. The ambient seafood has been reporting 18.5%. And in sum, during the first quarter, we report the gross profit margin of 15.5% out of the total sales of 31.2 billion baht. And here you can see some operating factors which are affecting the company, including raw material price of shrimp, tuna, and exchange rate on the major currencies which we are transacting, including the US and European. Now I'd like to pass the stage to Mr. Pakuli for the sustainability update. Thank you.
Okay, thank you, Kundet. Yes, let me have a very quick update on sustainability issues. Well, essentially, I think Thailand and also the Thai fishery industry has been under a lot of pressure from both the EU as well as the US government for the last 1 year, essentially on two major topics. With regards to the EU, that would be about IUU fishing. That's whether the fish are being caught properly or not, are being properly licensed, as well as whether the supply chain of those fish, including crew, are being properly treated or not. And on the U.S. side, that would be more about we call trafficking in persons. It's also about the crew on the board, whether there's crew on the board on those fishing boats are properly treated. So that is the issues that you can see that Thailand is facing. So I have to say that the Thai government in the past probably 1.5 years have done quite a few things in terms of legislations and also some new program to be launched in order to resolve this problem. You can see in the yellow boxes here, it shows this is all the initiative that have started by the Thai government in terms of a new legal framework, in terms of a new monitoring systems. For example, they call VMS, vessel monitoring system, which have to put on every boat to make sure that they can trace where the boats goes and where they fished, and so they can provide proper report for the sake of tracking down other fishing issues. Also, I think also they try to have all the foreign workers which is on board being registered rather than being uncounted. Then when things happen, so we can track everything down to any single boat if they have done anything improper to those workers. This slide is basically a summary of what are the issues, what are the two big issues, and what the Thai government's response, or the Thai fishery industry's response to these demands. And on next page, I would like to give a very quick update on the IU issue, because what really happened is the EU, the European Union, has imposed we call a yellow card, essentially as a warning to the Thai fishery, meaning that the Thai fishery as a whole, or will be together with the government, have to make changes to the existing system in order to get themselves to ensure that the product even in the future won't be banned from import into the EU market. But yellow card is a warning. At the moment, up to this point, it still have no impact on trade. But if the EU, if they decided they want to put a red card on Thai fishery, then there will be issues that whatever product which is made out of Thai fishery, maybe sourcing from Thai fishery fishing vessel, that could potentially be banned from import into the EU market. So what have been the progress so far? You can see there's some statistic on the right hand side. That means, for example, on the second one, 93.7% of the boats which are allowed to operate already carry the VMS. That means they can be tracked, they can be tracked during the fishing trip. And also, I think up to 35,000 of the crew on board has been registered, so they make sure that no crew will be unaccounted for, particularly when there's any issue, dispute about treatment to the crew. Then we can then they have a document and the evidence traced all everything down to the single boat. And also, I think. Also, Thailand already signed into with 13 countries on MOU on labor fishery issues, and some are still under negotiation. But at least that's quite a big step forward for the Thai fishery industry, in our opinion. But having said that, I think definitely the EU also they have their own requirement, which is up to this point in time it seems like it still not have been fully met yet. So that's why I think maybe last month I think they come up with some indications that they would definitely hardly review the situation in Thailand in May this month, and then they would see whether they will extend the yellow card or take the yellow card away from Thailand or not. Next slide. I think as leaders for Thai unions, as a leader in the seafood industry, particularly in the seafood and also the #1 canned tuna producers, I think we are very forefront on these sustainability issues. We want to make sure that everything we source are legal and proper. All the workers at the factory and down the supply chain are properly treated, and also the raw material, the way they've been sourced, are good for the long-term development of the fish stock, rather than we don't want to take everything from the sea and then all of a sudden people say that, okay, there's no more fish to come in the future. So we start a project called Sea Change Program. Essentially, they come with 3 main objectives. #1, we believe that the seas are sustainable now and for future generation, and we want to through our work to improve the fisheries. Second, I think we want to ensure and make sure all the workers that they work with you, work for us, or work for us through our own suppliers are safe, legally employed, and empowered. And also, last one would be the vessels that we buy from are legal and operate responsibly. So this is the objective that we start this program. So in order to communicate this message, should not just to the public as well as all the major suppliers and also our major customers. We did start a website. It's like a microsite of our Thai Union ThaiUnion.com website. That's a site called worldwideweb.thaiunion-sustainability.com, which would highlight all the issues that I just mentioned about. Particularly, it is broken down into 4 major areas. One is responsible sourcing. Second is safe and legal labor. Third is marine conservation. And the fourth is caring for our communities. So maybe next page. Yeah. This is the highlight of some of the highlights of the websites. This is how it's laid out. So you can see the 4 main areas we look at it, and also with the objective we have there. I think very importantly, you want to trace what is our target for each period and what is the results and progress. You can find all this in this C-Change website called World Wide Web Thai-Union-sustainability.com. Next, please. I think besides these 2 topics, we talk about IUU fishing and tips report trafficking persons. I think there's other activity I'd like to highlight to you. First of all, I think it's about the pooling sheds. I think late last year, a lot of people heard about Thai fisheries still using some maybe mistreated or slave labor in pooling shrimps. I think in order to really get rid of this situation, whatever malpractices in Thailand, I think we lead the industry essentially say that if we cannot control supplier, I think we should do something. So we decided that I think with the first, we decided to bring all this pooling operation, they call processing operation, back in-house. That would allow us ensure that all the workers are properly treated. And so that's what we have done. And so we terminate with all our pre-processor suppliers, and then we bring all those processors workers into our factory. So it's up more than 1,000 people. But they're now all working for us. So I think it gives us even more confidence that and ability to deal with the situation in Thailand. And second, I think is about, I think it's very important, particularly it's come from the top, our President Kuntirapong, and also all the senior executive. We have hosted a major conference for all supply in Thailand. I think it's more than 600 supply attend the meeting that to explain our code of conduct down the supply chain, and also code of conduct for all the workers. Make sure that no mistreatment of worker, not exist in our Thai Union factories, and actually also all our suppliers' own factories. So everybody after the seminar, they have to sign in for the code of conduct, the pledge to comply with the requirement. We have zero tolerance for any so-called slave labor or mistreatment of laborers. So once they sign in, we would send the audit to check their facility from time to time. And on the right-hand side, you can see there's the situations that besides that we would try to improve our sale, improve our supply. We also work very closely with the NGOs in Thailand. For example, the MWRN, Migrant Workers' Rights Network, that I think we work closely with them, have them to audit the factory for this year in 2016, and also allow them to provide training to our workers to make sure that workers really understand, particularly those Burmese workers, they understand their own rights. And another one, maybe next page, is on the upper left corner. This is another NGO that also works very closely with, is called LPN, or Labor Rights Network. Again, I think we allow them to visit our factory from time to time, and then provide training classes to our workers to make sure that they all have a proper understanding what the rights are and what they can request. And the other activity that we have is mostly about, also there's an initiative that is about we co-founding the first local network of the United Nations Global Compact, which is basically is an initiative started by the United Nations on the corporate social responsibility, and we work with a few leading companies in Thailand and try to come up with the standard and concept. How can we develop the CSR activities in Thailand? And the rest of the other activities is mostly about our CSR activity that we start by our own Thai Union or either by our own staff as well as with external network. Okay, I think it's a very quick update on the sustainability. I think before we go to the Q&A section, I think our CFO York will have a strategy update and outlook for 2016 for everybody.
Okay, thanks, Paco. Let's recap. Where do we stand in 2016? First of all, we started the year with a very strong Q1. I think this is an excellent foundation for the remaining 3 quarters and a solid foundation for growth. We have launched our sea change project and a lot of sustainability activities to manage the further improvement of the industry and also help our customers and clients to address their concerns and their requirements and needs. Continuous organic expansion of our existing business enhanced by new products and process improvements. We've launched a lot of initiatives in terms of organic growth. I'll share with you in a minute. And activities to do process improvement. We are starting to launch a larger degree of plant automation here in Thailand, but also in the Seychelles. We have an agreement with a machine tool manufacturer to develop a dedicated manufacturing process for our tuna activities, and this will help us to improve factory efficiency and production yield in our tuna operations. So we invest and we work a lot on operational improvement and operational excellence. We kicked off the second phase of our global innovation incubator to again more than double the size of what we have today. Great success until now, a lot more to come. We've launched 3 new market initiatives. One is to become a total solution provider for the food service sector. This is based on where we believe one of our key capabilities is recipe management, menu management for restaurants, providing added value solutions, not just selling a can of tuna, but really understanding restaurant chains, other food service clients, small bistros, small restaurant shops or quick fast food restaurants, and supply them with what they need and what they want for easy preparation of quality food for their clients and their consumers. So one initiative, solution provider for the food service industry. Second, a renewed focus on emerging markets. What are emerging markets? Middle East. We have formed a joint venture with Savola Foods, the largest Middle Eastern edible oils manufacturer and owner of several large retail chains in the Middle East. We formed a 50-50 joint venture. We have started with first revenue in Q1. Company was incorporated in January. We had initial revenue in Q1. We have a strong gross margin. We have a strong profit contribution already from a very small base. Second, we are opening an activity in China, 100% subsidiary, Thai Union China in Shanghai. We are in the process of hiring a team of executives and people in China to help us tap this huge market with quality seafood from Thailand and from other parts of the world and from the US or Canada. One of the plans is circling around lobster, around shrimp, around salmon. These are some of the key focus areas for the Chinese market. We have also started to develop a branded business in ASEAN. We will start here with our premium brand, King Oscar, to launch this in ASEAN markets, to position also Thai Union here in this regional market as a leader in seafood. And third initiative, marine ingredients. Sounds a little bit odd for those of us who are not food scientists. Marine ingredients is focusing on valorizing and getting more out of the production scrap. Today, 45% of a piece of tuna goes into the can, 55% we sell as fish meal to fish meal producers. We've started to look at this 55%, to look at calcium, to look at collagen, to look at fish oil, and at other possible value products that we can get out of the scrap. And we are happy to communicate very soon the result of a feasibility study to invest into an oil refinery in Germany and to provide to the food industry infant formula quality refined fish oil made in Germany. So we are driving this activity very, very fast into this new marine ingredients business. We are consolidating or have consolidated Rügen fish into the group. First 3 months starts very successful. Initial plans to roll out tuna in Germany exist as well. One thing I forgot to mention earlier on, and I'm very proud to share with you, Thai Union has launched its first Muay Thai foreign currency debenture. It is a US dollar denominated debenture that we have issued here in Thailand for $75 million at a fixed rate of 3.66% for a duration, a tenor of 10 years. Very attractive pricing here in the Thai market, a US dollar bond, and with together with HSBC, we've been able to successfully launch this. The Muay Thai foreign currency bond is planned to be a counterbalance to the Panda bonds and to the Samurai bonds and Yankee bonds. So we launched this here in Thailand, and we also have our name for it. Let's look at the guidance. Guidance for the year remains unchanged, 15 to 20% growth year over year. So the plan is to reach up to $4.5 billion in revenue, excluding M&A, that would be somewhere between 4.2, 4.3 billion. I think we are on track with that. Gross profit margin plus minus 16% with 15.5 in Q1. I think we're on good track. SG&A, we have to do a little bit more. We are above the roughly 10%. We're now at 10.9 in Q1. I think this will normalize back in Q2 and Q3. So we are confident to achieve plus minus 10%. Effective interest rate, no material changes to the performance in 2015 in terms of cost of debt. Effective tax rate, I think we all have to realize in Europe, in the US, the regulators are focused more on tax and tightening tax policies. So our guidance here is 18 to 20% effective tax rate. CapEx will stay around 3.5 billion Thai baht, and our dividend policy to pay at least 50% of our net income as dividend payout will remain for this year. Let me quickly jump to the question that we are asked, of course, all the time, and that is the question, so what is the long-term target? Now, Bumblebee didn't happen. Are you still committed to the $8 billion by 2020 that you talked about? And how do you achieve it? So we broke this down a little bit to make it a bit more digestible. So 2015, our top line was 3.7 billion. If we now look at the new divisions and the new initiatives that we've planned, emerging markets, $600 million by 2020. Food service, $400 million by 2020. Marine ingredients, $200 million by 2020. That's 1.2 billion. If we then assume that we can acquire businesses in the market in the magnitude of around $1.5 billion, that leaves us a 1.7 billion in organic growth. The bottom-up plans from our operations are supporting this. We have a very strong M&A pipeline. We have a balance sheet that is extremely strong. As Kun Best mentioned, the Rügenfischer acquisition we paid out of our Q1 cash flow. We didn't have to go to any capital market or any funding sources. We just paid out the Q1 cash flow. So very strong balance sheet to support the M&A pipeline that we have. We have a very strong M&A pipeline looking at various activities. Eastern Europe, there are some European markets that we are still weak in. We're looking at those. We are looking in Asia for potential acquisitions. In the frozen space, we're looking for activities and for food service related activities to get closer to the consumer. And we are in the process of identifying some pet care related M&A activities. Here we are a bit more careful. Market valuation is extremely high in pet care, so we need to make smart transactions. What we will for sure not do is overpay on M&A. So these are the three building blocks. 1.7 organic growth from our existing business, 1.2 billion from the new divisions that we are starting, or that we have started, and around 1.5 billion from M&A. I think this bridges quite nicely how we get to the 8 billion. We're very confident that we can achieve this. Of course, we need to drive many activities in parallel, but I think that is why we have built a complete and a global executive team. And on this page you see some of the, all of the key leaders in our business. We have a strong team in Europe. We have a strong team in the United States with Brian Rosenberg and Kun Shu-Wing. We have a global pet care leader with Paul English. We have with Dr. Darian, our global sustainability director. We have Dr. Tanya Watt, who is leading our innovation activities here at Mahidol with a global responsibility for innovation. We have a new head of strategy, Sven Maassen, who used to work in a consulting firm for many, many years in the consumers industry. We have Kun Ritterong, the president of our shrimp business. We have Kun Chong, our head of HR. We have a new joiner, Whitney Small, for our communications activities, public relations and communications. And we have the leaders for the three initiatives. Faisal Sheikh, our prior head of strategy, has taken over the emerging markets role. Very strong success in the Middle East, and he is now regularly in China to see how we can grow the business there. Scott Solar, previously our head of culinary development, the foundation member to build the skills in recipe development and understanding our OEM customers. He is now focusing on the food service business, and Kun Sirikamol, who has a lot of experience in marine ingredients and in the ingredient space, and is helping us to look into customer design-ins and close relationships in the ingredients space. And Ravinder Singh, who is a director at Thai Union who supports us in our mergers and acquisitions activities. A global team, a global executive team, I think with a lot of firepower to address all the challenges that we have. And I think this is, comparing to 3-4 years ago, a much stronger bench that we have in Thai Union. I think it's probably the strongest management team of any seafood company in the world. And with this, we can focus and manage all the challenges to come. My final words, 4 things to remember about Thai Union: continued growth. The 8 billion is achievable. We have a very strong organic pipeline of activities and a very strong M&A pipeline. So continued growth is assured in our business. We have an ongoing strong cash performance. We have a very strong cash orientation to improve capital efficiency. That helps our shareholders increase return on equity and return on capital employed. And we have shown for the last 9 quarters sequential margin improvement, margin accretion, to be on track to achieve 20% gross margin by 2020, 6% net profit margin by 2020, and the key focus areas: innovation, operational excellence, and discipline in execution, a key component for that success. So sequential margin accretion to 20%. Third point. Fourth, last but not least, sustainability, responsible and ethical business management, behaviors that we can be proud of, that our employees can be proud of, and that our customers and shareholders can rely on. I think these are the 4 key points to take away from today's presentation, besides having started with a good Q1. And with that, I think we move to the Q&A.
Thank you, Mr. York. And that wraps up our presentation. Now I would like to open the floor for a Q&A session. Any participants who have the question, you are welcome.
The question is around pet care acquisitions, if this is branded or OEM. As I mentioned, valuations in the branded pet care are extremely high, so we are potentially a little bit more careful on branded acquisitions. So I would venture that OEM acquisitions may at this stage be the more logical choice. If valuations are normalizing, we could then, at a later stage, move into branded. But at this stage, I think we need to focus on a more OEM-driven approach.
I have a question about your 5-year target on page 49. And you mentioned you will increase the sales by $1.4 billion by M&A. And my question is, how much do you expect to invest for M&A for the next 5 years?
I think we don't have an exact investment amount in mind. Of course, there is an investment that we can finance from our balance sheet. Today, if you convert the 0.69 debt-to-equity ratio, you can see we have enough firepower to even go for large acquisitions. I would rather answer differently, not what is the total amount of investment, but more what is the valuation range that we are looking at. And I think here we need to be disciplined. We should not overpay. We need to stay clearly single-digit EBITDA multiples for our acquisitions on average. If I look at the last 2 years while I'm here on board, I think the average EBITDA multiple for acquisitions was around 8 times, probably slightly below that. I think that's a very healthy process. I would not rule out that we couldn't do a deal maybe valued at 10, but I think it all needs to lead to earnings accretion. It needs to be financially sound, and we need to see how we can create synergy value. So that's more the focus that I would have. I would not be able to mention a specific investment amount.
Okay, so do you expect to fund the money for the mandate by internally, or will you lend?
Yeah, I think at the moment we are not looking at very, very large acquisitions. So I think something like Bumblebee with 1.5 billion, you would then, of course, look back at potential equity raise. At this stage, I'm doubtful that we are looking at acquisitions that large. So for the time being, I would believe that we will fund the acquisitions out of our cash flow and debt.
So one more question related to this, and the next question is about the Muay Thai bond you mentioned. For what do you use the money you raise from this bond?
Right. Well, specifically, we have some refinancing needs in the United States. We have there some fixed loans outstanding. We're considering refinancing of those. We have the acquisition in Germany, Rügenfisch, so we use some of the proceeds at an attractive rate to invest there. And we have our Indian joint venture that we route the funds into.
Okay, thank you.
And if there is no further question, on behalf of Thai Union Group, I would like to thank you all participants, investor and fund manager for joining Thai Union Group Opportunity Day. And we would like to adjourn the meeting now. Thank you very much.
Thank you.